Good afternoon, good morning, good evening, wherever you're coming from. Welcome back to Dan's Trades. Today is July 16th, 2024. It is currently the afternoon. We're in New York PM session, basically. Set time is 1:17 p.m. Central Time, 2:17 p.m. New York time. We're looking at a triple chart here. YM on top for the Dow, ES in the middle for S&P, and NQ in the bottom for NASDAQ futures contracts. Not a well correlated day whatsoever. If we look at the daily chart quick, we see the YM is going gangbusters, ES is up, and NQ is down. So definitely not a symmetrical market today. I almost didn't take any trades, just about to walk away, and then I saw a couple setups do happen. So this is obviously a day that I wasn't really fond of once I started watching after the 9:30 open. But I will just get into it here, do a little quick review. I did a couple of recordings, but it didn't turn out the way I wanted in Camtasia, so I'm just doing a review here. So appreciate the questions. I am getting a few questions, and I will start this off with, I am not a financial advisor. This is for entertainment and or educational purposes only. I'll throw out the risk disclaimer in the beginning. But I did get a couple emails. Just want to say quick that I appreciate people reaching out. Another person found me through videos being shared, so I appreciate that. They were just asking if there's a reason that I was trading NQ versus ES and when I do make the decisions. So I will say, personally, I'm going back to trading some ES. I have traded both. I've traded all of them actually over my career. NQ is definitely wilder until you're ready for it. ES is more reserved, I'll call it. So there is no right and wrong. There is some ways to find cleaner setups, different parts of the year, but take a look for yourself, see what fits you better. So there is not one magic secret sauce that I can say that's going to do that, but I do appreciate you, Kusid, if I'm saying your name right, Kusid, Kusid, not sure, but I appreciate your email, and that's the best I can tell you there is just backtest a little bit of both and see what fits your personality better. Some people like trading NQ better, some people like the ES. If you really like boring, maybe you can trade the Dow. The Dow does move typically a little bit slower, but it's a little bit more erratic as well. But again, neither here nor there. So 1 hour chart, and I am starting to incorporate more into looking at the opening range gap. That's interesting here. That's what we're noted here in this premium discount level, ES. As we see the YM and how you view that, let's go down here and you turn off RTH if you haven't, or turn on RTH, regular trading hours versus electronic trading hours. This candle's close to this candle's open, forms this mark. Go back to electronic, you see the overnight time periods. Big difference here is if you look at the YM at top, go to RTH. We haven't been back down into it. So it hasn't filled any of that opening range gap. It's leaving that for later. Whereas both NQ has filled it in, is now below it. ES has also filled it in, traded below it, came back up. Now it's currently just at the top portion of that. So definitely comes to the non-symmetrical markets right now and what we're looking at there. Jump down to a 15, take a look at the setups I was looking at, why I didn't like some of the early morning trades right past the 9:30 open. Then when I did take a couple, what I was seeing on the ES I traded today. So here, let me drop back to the 1 hour just quick, show you. It's where I have this bearish fair value gap notated here with this red square that is overlapping with the opening range gap. So let's move everybody back to ETH. ETH across the board, okay. And then, so here's where I have this filled in. SIBI. Price action coming across, overnight activity, 9 o'clock, 9:30 open, give or take. We'll drop down to the 15 minute. So I did annotate this wick, which was part of the news at 8:30, and I started tracking at 9:30, which is right here. So here's the 9:30 candle for ES. So you can see the Dow just took off and it's never come back. She checked out. Elvis has left the building up there, airborne. So looking at that, so I was looking at a higher time frame. Field of vision dropped down into the 1 minute. Here's that 1 hour fair value gap. We traded up through it as part of the 9:30 open right here. So there's the gap. 9:30 open, trade up to it again. There's nothing but upside in the Dow, downside on the NQ. So there you can see the highlighted not correlated markets for AM. I was trading ES. Again, trade what you want, trade what you like, trader's preference. So I was watching these. I notated this fair value gap after 9:30. I was looking for it to be a potential inversion. I was looking to target filling in the opening range gap. Let me throw on the executions. So here's where we waited. I tape read all of this, so didn't take any trades in here, but I was annotating it out, getting a feel for the day, waiting for 10 o'clock. Didn't want to chase this down, so I just tape read all of this, came back up, saw these relative equal highs, saw that we targeted it. Once we swept it right here at 10:51, beginning of this macro, price started moving down. We had a swing low on a 1 minute, break below, and then as on a retracement here, I took a short, looking to target getting down into here. So that was my in a scalper's mindset today because of this not symmetrical market. I almost didn't take any trades. Ended up taking this one short here, 57.0225, moved down nicely. Just missed my exit by a couple ticks there. I had sitting down here, came back up, stopped me out, perfectly fine, just playing by the rules. Didn't move my stop, didn't trail it down. And then I saw, okay, we took that out. Then we may, once we spiked above one more time, took one more short on this wick. Next candle here, and stopped me out as well right away. So you can see there's the entry, and I closed this one out manually. I said, all right, price is not doing what I wanted to do in the next minute, so I closed it immediately. 57.09 was the exit. 57.0625 was the entry, so 3 handles just under. And down here we were 57.02, stopped out at 57.06, so 4 handles there. So 2 lost trades, came up and spiked. Then I said, all right, we took a draw on, let me jump back up to the 1 hour chart, show you where this came from. We have this wick, which is from yesterday, the 11 o'clock candle, threw my fib on there, and waited for price to hit that consequent encroachment of this wick, potentially a rejection block. Again, I'm not here to teach, just showing you what I'm doing. Drop back down to the 1 minute. Now you know where this came from. So 2 shorts failed. Continue watching. I was going to be done for the day, just close it up. And then I saw this displacement below, created a fair value gap after hitting that price level. Got my interest again. Drew in this fair value gap. We have an inversion, anticipated inversion fair value gap right here. Got in short on a market order. Didn't have a limit set. 5707.75, and I was targeting again this area right here that I was previously targeting, and boom, 56.98 took it out. So this trade made up for the first two losing trades and then some. So profit on the day, we're in the green. That was the trade. Don't have a recording of this one, and my Camtasia failed over here, but you can see there was nothing else earlier in the day. And this is not paper account. Beautiful. So we're back in the green on the day. Didn't take any more trades in anything. So just recording this now. So that was today's trade. And if we throw the tool on there, you can get a good view of it. So here was my ideas. Targeting the 5 points. All right, we'll take a look at the 15-second chart just to view it. Much easier actually this way to see it. And I do like trading this actually. So there's my first idea, 5702. Scrunch this down. 5702.25. So there's where we were targeting the 5 points. There's where it got to 56.97. I was targeting 95 3/4. So I was targeting consequent encroachment here at the top of this gap, just like we closed it out here. That was my original target here for the, or I was targeting 5 points, excuse me, original target. So this one I closed it out because I was higher up. I didn't need it all the way down here for 5 points. That was the reason I targeted CE of this range. All right, that explains that. Second trade, same thing, but then as soon as I didn't see it move like I wanted it to, I cut it right there, even before it came up with my stop loss. So early exit, and then re-entry. Looking for a tap in. Didn't enter on a 15-second, but this is just what we see. So here's where I took into account, and stop was above CE. Maybe not even. Stop was right down. Yeah, it's 5 point stop. Offering 5 right here. Then I managed the trade, and I saw that the opportunity, the potential was there to capture more than 5, so I moved my exit down to the 56.98, and I started trailing the stop down. Not super tight, so it did hit this one. This was a beautiful move here at 11:30. These 3 candles were beautiful to watch. We paused for a second, then spiked back down and took it out, and only went below it. If you look at the low, 56.97 3/4. So I will call that a beautiful exit for me. I loved it. And it just chopped around forever, went into lunch, chopping around. So I like that for an exit. Did it go a little bit lower? Yep. Did I care? Nope. Do I want to wait another hour and a half to get a couple ticks? Absolutely not. So beautiful trade. Ended up being 10 points. Also on the nuts, so that's why we're able to mitigate the earlier losses with risk management. That is going to be a wrap for today. Short and sweet. I will work on getting more live recordings as I do them again. Today just was not a great Camtasia day. And I will leave it at that. So remember, tomorrow was promised for none of us. Make sure you live for today. Be safe.